We quite often anchor ourselves to the thoughts and the views and the guidance of industry experts, of prominent financial figures, and of just influential people within the financial space. And so often they encourage, or they really do make the case for why you should sell. And that's always at the time when those assets take exponential trajectories up. Here's a list of very prominent, well-known, and influential experts speaking on the direction of Tesla stock, telling you that it's a sell, and then it goes on extremely exponential moves up. Fred Lambert from Electric says he sold all his shares and then it went up 26%. Tim Waltz said that Tesla's stock is a sell at 225 and it's dropping, and then it goes up 32%. Ross Gerber comments on the importance of replacing and changing the CEO and that it's not going to work with Elon Musk. The stock then goes up 120%. Steve Wozniak says that Tesla's stock's overhyped. It's not going to be here in 10 years. It's still here, and it's gone up since his comments 1,325%. Gordon Johnson encourages the street to make these massive institutional investments. On April the 3rd, 2018, it goes up by 1,571%, and it's just going to continue to rise. CEO of Volkswagen, Herbert Diess, Tesla's days are numbered once we get serious. It goes up 1,477%. CEO of Nissan, Carlos Ghosn, says that they're a niche player that won't scale. That was clearly wrong in 2015. Since then, it's gone up 1,663%. And the final one is the most prominent inverse critic and commentator in the financial space. And if you are just to do the opposite of what this person suggests, you will outperform every index, every stock, every company, every expert, just by doing the opposite of what Jim Cramer says. He says, I'm not sure about Tesla as a business. It's not going to work. The stock goes up 18,658%. You can see that the financial commentators that speak on these companies, on these stocks, on these assets, who encourage and try and guide the general public on how to make decisions, really prevent people who try and understand where a company could go, to really understand the exponential returns that could happen, could be realized, are unable to get past these prominent figures who then encourage retail investors to sell and avoid the stock completely, missing out on the opportunity that is there in the future. Tesla have built the foundations for AI with their data centers. They have managed to surpass the competition, Waymo, who have vehicles costing $180,000 each and also are retrofitted with different pieces of equipment, LiDAR technology, whereas Tesla's vehicles are just pure vision only, and they're able to navigate any area just like a human. There's nearly $8 trillion in money market funds ready to be deployed into risk, and with Lutnick and Navarro now being less vocal in the mainstream media compared to now Besant being the more vocal on trade talks, there's a lot more cooling in the macro. The macro tensions that have led to volatility downwards for equities are starting to cool, and cooler heads are starting to prevail. In this video, I want to go through two things. The VIX, which is an indicator that can be used to understand the velocity of stocks being sold and bought, and then also how it's helped me understand that Tesla's created a very firm and solid floor, and the price should trend upwards from here. The second are the milestones and the catalysts. Milestones are different aspects of the Tesla business that will be helpful in order for it to continue to build and grow, and that will create intrinsic value in the stock price. However, the catalysts are what will cause the stock price to surge higher. The VIX, in simple terms, is the fear and greed index of the stock market. The higher the VIX, the more velocity at which people are selling their equities. When the VIX is above 60, it's always a good time to buy. That's the initial drop. The second time, when the VIX is at about 37, it's gone down further, but it's usually at the low at this point. The next time, when the VIX is at 31, this is when it's past the low and it's recovering. And this was 2008, the great financial crisis. So this was a historic moment in finance. Again, another example is COVID. VIX above 60, that was the first initial drop. Then the second time, the VIX is at 37, it goes down again further, but that is the low. And then after that, when the VIX is just at 31, that's when you're past the low and the market starts to trend up because there are no more sellers left. If we go over here, this is what's happened recently. We had the pre-liberation day, then we had the second low. The VIX was at 60 on pre-liberation day. Then it was at just over 37 on the April 7th low. And then after that, when it was at just 31, we were past the low at 5,500. This got me to understand that Tesla's stock was not just oversold, it was sold out. The first initial drop when the VIX hit 60, the stock came down to that 220 level. The second time, it was able to come down, but it created a higher low. And that signaled a flaw within this stock price. The VIX, the fear and greed, the catastrophic events couldn't get worse to bring the price lower. So at that point, it creates confidence in knowing that this stock has now been met by its sellers. It's been met by all of the fear. Everything that could possibly go wrong has gone wrong, and the stock has managed to hit a certain level. And also with the VIX, that gives you that really clear, objective, data-driven indicator, you can see that that also has signaled that the fear that's brought the stock down originally is now subsiding. Part two of this video, I want to look at Herbert Ong's developments for Tesla. These are going to be developments that are going to be occurring throughout the rest of 2025, second half of 2025. And Herbert Ong's an incredible financial analyst when it comes to Tesla, especially when it comes to the robots. So let's get into some of the different developments that are going to be occurring and what I believe they're going to be. Are they going to be milestones, intrinsic value, or are they going to be catalysts, which are going to potentially propel the stock higher? So like, subscribe, comment down below, notification bell. Let's get into it. Number one, Cybercab pilot in Austin. I believe that this in June will lead to potentially fear of missing out, and that will be a catalyst for the stock, but it also could be sell the news. So as soon as it's actually rolled out, that could be when people sell. Number two is unsupervised ride hailing launched in Texas and California with also unsupervised FSD version 14. I believe that these two are going to be extremely important catalysts because they're going to start to show scaling. It's going to show that Tesla is scaling this robo-taxi network past Austin. They're going to now start to scale it into other cities, which is going to be able to trigger the interest of Wall Street analysts who are going to start to be able to see, okay, this is starting to be something we can model into our spreadsheets. We can start to see how much of the ride-hailing economy they're going to start to penetrate. That's going to start to become a massive catalyst potentially for the stock. Critical interventions being safer than humans. At 700,000 miles driven, that's when you reach the point where you're safer than the average human driver. I believe that this will just be a milestone, that it will be at that point where the intrinsic value of fully self-driving technology that Tesla's created, the software, has now built a flaw within the contribution to the earnings per share. New affordable vehicles being launched. This new model will be under $25,000. This is going to open up a completely new market because when you start to price the vehicle under $30,000, you start to address 50% of the total addressable market within the US, a completely new consumer because they can afford that price point and they're attracted to that price point. So that will be a massive catalyst for the stock price. Any OEM licensing deals will definitely be a potential catalyst for the stock price because it will show and it will signal that the companies, the auto companies, are unable to build and develop this software themselves, and they're going to need to rely on Tesla's proprietary software in order to create autonomy within their vehicles. 4680 battery production. This is going to be helpful for the battery constraints that Tesla are currently experiencing, and it will help them build and develop more of their products, their semi-trucks, the Optimus robot, the more affordable vehicle, more Model Ys. So all of these different products within Tesla's company will definitely be able to continue scaling into the year and into 2026, which is going to be helpful. So it will be more of a milestone adding to the intrinsic value of the company. Cortex Supercluster 200,000 H100 equivalents. I think that this is just going to be a milestone that's going to lead to intrinsic value within the company. They're going to be able to process more data. It's going to lead to more sophistication. It's going to lead to better models being developed for the FSD, which is going to help the cars drive and become unsupervised and just lead to a better approach to AGI, artificial general intelligence. So I think that this is just going to be seen as a milestone rather than a catalyst to the stock. Dojo Gen 2 will be the build on the Generation 1, which they already have, using that specifically for fully self-driving and Optimus because of the certain silicon that they use within the wafer. It's designed specifically to process fully self-driving frames. This is going to be I think, a massive catalyst. It's going to signal Tesla no longer needs to rely on NVIDIA's H100s, B200s, and the chips that NVIDIA supply to all of these big tech companies, that Tesla are already being able to vertically integrate their own product. Lithium refinery is going to lead to another level of intrinsic value. So it'll be a milestone because they'll be able to start to become even more vertically integrated. They won't need to rely on other countries for their raw materials, for their batteries. And so once they become more vertically integrated, they've got that localized supply chain even more within the countries that they're operating in. This is just going to lead to the company building even more intrinsic value. And it's going to be a milestone that I believe will not add a catalyst or increase the stock price, but it will definitely act as a way of keeping a floor on the current level. Optimus 5000 internal use will be a catalyst. If you see a video of Optimus at 5,000 units operating, doing useful tasks within the Tesla factories, and the Tesla factories can absorb that amount of Optimuses, it will be a catalyst to see that this is going to be something that they can scale. They have more units than any other robot company, and that will definitely be a catalyst. Megapack factories launched in Texas will just be another milestone. There's already been Megapack factories launched. The energy business isn't really accounted for by Wall Street. When they deploy and they show their profit, it's not really realized to the extent that it should be. This is a $1 trillion company in its own right, and therefore I see this as a milestone because I don't think the Wall Street analysts will be able to see this as a catalyst to the stock. They're not going to be FOMOing in based on the Megapack. So I think that this is going to lead to more intrinsic value within the stock price, and it's going to be a milestone. Vehicle sales going over 2.2 million will definitely be a catalyst because currently Tesla is still seen as a vehicle company. The deliveries are so important to the movement of the stock price, even though all the other companies from energy, Optimus, and then also fully self-driving, the robo-taxi network, the services as a subscription, and the services already starting to become a little bit more on the radar of Wall Street analysts, it's still not there. And I think that the fact that they're still managing to progress in improving the amount of deliveries, they're still showing progression in their auto business, and they're starting to make more profit from their auto business. This is also going to be a very good sign for Wall Street, and it'll be a catalyst for the stock. Okay, how could it all be relevant? Well, I'm going to go through a few things in this part of the video. If you got value from this video, please like, subscribe, comment down below. I love the comments when I get them, and I also just hope that I add some value if you get to this stage of the video, because your time's very important and I take it seriously. So I try and build the videos around being able to provide you with the signals that make the most sense to me, that help me, that give me the ability to understand this company and continue to build a position within this company for the long term. This incredible financial analyst called Joe Badgie has put together this incredible spreadsheet. This is so insightful. And I wanted to just take a part of this. It's basically going through how much disruption just a fraction of cybercabs that Tesla produce could have on the market share of fully self-driving ride-hailing within the US. So you've got Waymo that currently have a driverless autonomous vehicle, and then you have Uber that's a well-known ride-hailing company. Now, if Tesla are able to scale to 1,000 vehicles, they will have 120 vehicles more than Waymo. They will then eat into 50% of Uber's current operational business. They will then start to disrupt with just 1,000 vehicles the current autonomous vehicle Waymo that have been operating for many years, and then Uber, who have been operating for many years. They will disrupt with just 1,000 vehicles this entire company, these entire companies. The next part is Chris Camillo, who is a really sophisticated investor who puts big positions together. He's waiting for Optimus before he deploys tens of millions into Tesla, potentially hundreds of millions. He's waiting till Optimus before he makes his decision to fully invest and go all in. However, he also understands that Tesla's not a car company and that his signals, someone who's very savvy, understands that this company is going to start to move very fast and it can get ahead of those that haven't really understood what this company are currently doing and what they're currently building behind the scenes. The last part is this really stuck out to me from Tesla economics. And it's that you're going to have so much disruption when you have autonomous vehicles that don't require a driver, that can be operational at all times and will have a consistent service. You will be able to, as a company, wrap a Tesla Cybercab with your logo and advertise your company 24/7 as these cybercabs operate autonomously and deliver food and start to disrupt the Uber Eats services as a subscription model. When you start to disrupt that industry as well, you'll start to see that these companies will start to license Tesla cars. They'll start to buy these cybercabs themselves and bring them into their own fleet. And at that point, you have a completely new customer. You have institutional customers, you have business, you have corporate customers, you have also then got the public as well. And the combination of those two could be extremely positive for the direction of the stock price, the profitability of the business. So I hope you got some value from this video. I hope that you see that the milestones and the catalysts that are going to be occurring throughout the rest of 2025 and building into 2026 and 2027 could take this stock to levels that are incomprehensible. So thank you very much. See you in the next one.